All right, awesome. We'll kick it off. We'll get started. First off, I want to thank you guys all for taking the time. I will do my very, very best to be incredibly on point with time because that is the most valuable thing that we all have. But today we're going to talk about renovation loans and try to disseminate and eliminate some myths that are around these types of programs in the market and how it can really benefit you to gain this education as you list properties that might need some work or as your buyer finds challenges with finding high-end finished types of properties in those price points. So kick it off. My mouse works. There we go. All right. So first off, just want to let you know, guys, know who we are. Some of you guys work with us, work with our team. Some of you don't. But we are the Turco team at CrossCountry Mortgage. We have over 160 five-star Google reviews, and we have hundreds of reviews on other platforms as well. And the team consists of myself and my wife, Yasmin. We are the leads as advisors to advise your client, get them through the entire process of being pre-approved to purchasing and making sure they're financially fit and making good decisions in their life. Candy is one of our teammates that's part of our pre-approval team and in charge of communications. So she is helping facilitate this webinar for us and making sure that you guys that this gets recorded and everything goes smoothly, but sometimes it doesn't. But what she really helps with is when a client is placed in our hands with your trust, she helps us get them from being introduced to consulting with us to filling out an application, getting us docs, and getting them pre-approved and shopping. And then once they're under contract, she helps us with the initial disclosures. Pieces that are missing from this document is on our team also, we have our own processor, Kelly, and our own condo guru, David. And they come in and help after contract with getting our clients closed and getting condos approved for financing, both conventional FHA, VA, and USDA. All right, so that's the little spiel about us. This is what you really came for, right? Homes that need help. So what is a renovation loan and what does it do? I mean, in the most simplistic way that I can explain it is it allows someone to finance the purchase of the home plus repairs that they want. Borrowers get to choose their own contractor. And one of the most vital things that we'll talk about is having an estimate of the work that needs to be done. We'll also talk about how the loan closes in the as-is condition and everybody moves on with their life and the project for repairs starts after the buyer takes over ownership. Okay, so some common misconceptions about renovation loans. Some agents won't show a property because they don't think it'll qualify for a regular mortgage. Buyers can be overwhelmed because they walk into a house and they see so much that needs to be done. And without them being aware that renovation is an option, they lose out on a chance to actually transform a property, right? That fixer-upper that everybody likes to watch on HGTV and all those other shows. That was a common way to build equity wealth, was to buy a home that needed a little bit of love. And without knowing this and without being open to renovation solutions, there's probability that a property sits on the market for longer than it should, okay? But here's the solutions that we have, okay? On the purchase side, if you find a property that's outdated and a client doesn't have funds to upgrade it, or listing content is missing out on potential buyers who don't have cash only when it's written as cash only, and you believe the property won't qualify for a traditional loan. Sellers tend to not want to make repairs to certain properties. So that's another situation that you might run into with when you're on the listing side, is that a seller just doesn't want to do any of the work. They want to sell it as is, right? The added bonus on the refinance side is that when you or a client owns their home already, we can do a refinance into a renovation program. The beauty of the renovation is that it looks at the value after the repairs are done. We'll talk a little bit more for that. On the refinance, there's a potential for zero cash to close, and a homeowner can customize their home however they want. And of course, when you refinance, you're not competing with people. So renovation loans, Used for purchase, they're allowed on single-family residence. You can also do them on 2, 3, and 4 unit properties. There's allowances to do it on second homes that are categorized for vacation and also for rental properties. But on the rental property, it's limited to just 1 unit single-family homes. So if it's an investment property, a renovation loan is not an option for a condo or a 2, 3, or 4 unit. Types of things that can be done. I mean, it's honestly endless, right? You're going to look at the basics like, hey, let's remodel, update the kitchen, fix bathrooms, roofs, HVAC systems, septic systems. You know, one of the major ones that's becoming very, very popular that you see on this list is constructing an accessory dwelling unit, especially with the law changes in Massachusetts and, things that will likely happen nationwide. Adding an accessory dwelling unit, an ADU, is a real option for many, many homeowners, and also a real option for someone looking to buy that is looking for an in-law, but the property doesn't have an in-law. We can finance the construction of that now. Okay. You can even do landscaping, build a pool. Like it's pretty endless. There's some common reasons why we believe agents don't leverage renovation lending. One of the main reasons is a lack of education, right? With anything in life, what we don't know, we fear, right? And then we have misconceptions from things that we've heard from others and experiences that others had. Other reasons agents won't leverage renovation loans is that they had a really bad experience with one. Here's the thing with renovation. Just about any lender can do it, but that doesn't mean that they can do it well and efficiently. The beauty of our team moving to CrossCountry is that we have a dedicated renovation loan department. It is what they do. Everyone that works in that division just manages renovation programs. So when we go into the process with a client, we have an entire team that leads us through the entire transaction and keeps us on time with dates. Another reason is that a lot of agents just don't know where to start. Like, what's the first step? And many of you are taking that first step by joining this webinar. Okay. So one of the most important things for a client to do before you start showing them any properties is to get them pre-approved. Okay. A client's renovation budget is really their total pre-approval amount and then how that loan amount varies per property based on the taxes. So if a client's pre-approved for $400,000 and they're looking at a home that costs $300,000, they actually have a renovation budget of that $100K, right? So they can use the $300 to buy the home and another $100K to do renovations that they want to hit that, that approval limit that they have for $400. So alterations on renovation loans combine hard costs of labor and materials, soft costs like plans, permits, and reports. There are renovation loan fees when it's related to title and inspections that might need to be done. We're also going to fund a contingency reserve. So if there's any alterations in the budget, there's some money set aside for contingency. And then also we're going to escrow some mortgage payments, and that really depends on the situation of how long the project is going to take for it to be habitable. What we do is we escrow some mortgage payments so the payment can be made on behalf of the client while they're waiting to move in. So really how this helps your buyer and your seller is it opens up the property to more prospects. More buyers have the ability to view a specific property. And as a seller, you're opening up the pool to a larger percentage of people that can potentially compete for that price that you're listing it for. There's no need for a buyer to have significant cash on hand. It's going to be their standard down payment, their standard closing costs, and then the alterations are financed. And it completely changes the perspective about house hunting because now they're not looking for things that are perfect. They can actually entertain things that like, hey, this kitchen doesn't have a floor, or the landscaping's horrible. So just basic things that they might want to do to improve the property, but don't necessarily have the money for it. Okay? So here's an example of a great candidate for a renovation loan. So this is a listing, an old listing when I designed this webinar a while ago, out in Dallas, Texas. So we are licensed in all 50 states, so we can help your clients all over the country. And we do have agents on this call from all over the place. But this was a single family home listed for $135,000. And you can see that in the description, it says great investment, handyman special. That listing description will deter many potential buyers because it's not marketing that it has the ability to be purchased using a renovation loan. Okay. So if you look at the condition of this home, you can see that it needs some love. Like the kitchen doesn't even have any faucets or anything, right? So this is 100% something that to open up your pool as a listing agent, instead of marketing it to investors only, we can market it to anyone really, and just make sure that descriptively we include that renovation loans are an acceptable type of submitted offer. Okay, we'll talk more about that too in our Q&A as well. So writing an offer and calculating the purchase price is what we really want to do is add the sales contract price plus the alteration budget, which becomes the total cost of acquisition, right? So the example we used was, buying a place for $300,000, doing $100,000 worth of renovation. The total acquisition cost of the property is $400K. Okay, and a renovation program is available in the one that most people know, which is FHA 203K. It's also available under the VA and USDA program, and it's also available under the conventional mortgage program with Fannie Mae and Freddie Mac as well. That's the one on the far right, that's home style and choice reno purchase. Okay. On the FHA side, it's a 3.5% minimum down payment on the total cost of acquisition. So buying for 3, improving it for 100, total acquisitions 4, they're doing a 3.5% down payment on that 400,000. On VA and USDA, we have the option for 100% financing. So the client doesn't need to make a down payment if they qualify for these programs. On the conventional side, the home style and choice rental purchase programs, first-time home buyers can do as little as 3% down. So 3% down of the total acquisition cost. If they're not a first-time home buyer, then they can do as little as 5% down. And that pertains to condos, single family, 1, 2, 3, and 4 unit properties as well. They can do as little as 5% down. Right? So how a buyer benefits from using a renovation loan is it's one transaction. One single transaction that includes the combined amount needed to buy the property and pay the seller, plus the budget for alterations. So a buyer that is educated in these programs can take advantage of all listings that are available, regardless of the condition of the property. It allows the buyer to consider properties that they might normally never look at because they don't have enough funds to do projects. Right? And the down payment options mirror traditional loans. So first-time home buyer can do 3% conventional. Second-time buyer can do 5% conventional. On the FHA side, we can do 3.5%. VA and USDA 0%. And I don't know if any of you guys are familiar with the HUD 100 down program, but there's very, very few properties across the country that qualify for this. But if it does, they can do as little as $100 down. A borrower makes full amortizing mortgage payments just like a regular mortgage. So it's a fixed interest rate. They can choose a 30-year, 20, or 15-year term. The rate's not going to change. It's not an ARM. It's not a construction to perm type of program. It's just a regular mortgage that allows you to finance the alterations into the program. And we all know an educated borrower is a powerful borrower. Okay, so this grid is something that I can send you guys upon request, but it's really just a program comparison guide that showcases that in FHA 203K is not the only option. It's just the one that most people know. So we can do conventional, we can do VA, we can do USDA, and add a renovation highlight to this type of program. Okay. So at CrossCountry Mortgage, we have one specific thing that is very different than the guidelines of Fannie Mae and Freddie Mac, is that we will not allow the buyer to do the work. So we won't allow them to be part of the demo. We won't allow them to be part of the repairs. It has to be led and run by either a licensed contractor, if the state that we're in requires contractors to be licensed. Places like New Hampshire, contractors don't have to be licensed, but we require them to be insured for liability purposes. Okay. But other than that, the programs that we have at CrossCountry follow the same exact guidelines of Fannie Mae, Freddie Mac, FHA, USDA, and VA. So with the USDA, you're allowed to do, there's two versions of the program for each. One's called limited, one's called standard. Limited is anytime it's under a certain dollar amount and it doesn't require structural repairs. If it requires structural repairs and is under that limit, it just becomes a standard program and requires more documentation. So you can borrow, right? So let's look at the USDA one that says less than 35,000 for minor cosmetic non-structural repairs. If it is structural, we move it to the program that's called standard. Just requires more documentation and more check through on the contractor side. And you can do this if, hey, I need to lift the foundation that's going to cost 15,000. We can do that. They don't have to attain 35 to be able to do structural repairs. So what limited means is that there's no inspection points. There's one disbursement of the money to the contractor, where a standard will manage the project, where there'll be some money given up front to start the project. Then there'll be an inspection of the work. There'll be more money released to continue the project, and inspection will occur. And then a final inspection will happen and the rest of the funds are released. So when it comes to the contractor side of who you partner with or who a buyer partners with, we want to make sure that they are fairly established to self-fund some of the projects, because they will be paid in sections as they go through doing the repairs. And the number of inspection points, yes, this is for standard. Yes, the number of inspection points for standard really depends upon the scope of work. So that becomes one of the most important things, is that we need to have a contractor estimate before an appraisal is done. We'll talk a little bit more about that as we go deeper. Okay. So on the FHA side, limited and standard is 3.5% down. It's 1 to 4 unit owner occupied primary residence only, 30-year fixed mortgages, and we can gross up the after improved value up to 110%. Limited repairs are under 75,000, and standard repairs are 75,000 and above, up to a maximum of what the home would be worth after the work. And the minimum is 5K, right? So you can have a house painted and make that part of a renovation program. We also have the ability to create co-branded flyers. So this blank space that you see at the bottom of the page can actually be co-branded, where I put you first and me second on the right side, that you can use to educate, during a listing appointment, and you can use to educate your buyer as they go through the pre-approval and shopping phase. Fannie Mae and Freddie Mac, these are your conventional mortgages, and they allow 3 to 5% down payments for 1 to 4 unit properties. Primary residence 1 to 4, it includes condos, but it will also allow 1 unit second homes and investment properties. You're not allowed to do a multi-unit property and categorize it as second home, and they won't allow it on investment properties on the renovation program. With Fannie Mae and Freddie Mac, there's almost no restriction on the type of improvement that you can do. So with FHA and USDA and VA, the government type of programs, they limit what you can do. You can improve the property, but you can't really build upon the property. So I'll talk about that a little bit more as we go through the slides, but Conventional is the one that allows whatever the client wants. It even allows luxury items like building a pool, backyard gazebos, outdoor kitchens. All improvements have to be affixed to the property, except for like appliances, kitchen utility remodels. An accessory dwelling unit can be built and it does not have to be attached to the property. It can be detached and standalone on the land. Now with FHA, USDA, and VA, if a client wants to build an accessory dwelling unit, they can only do the version that is attached to the primary residence. Conventional allows you to build a detached version. And then with all renovation programs, you cannot do a complete tear down and reconstruction. That would be considered a construction loan because the foundation gets disturbed. Okay. So building an accessory unit is a real solution for a lot of homeowners and home buyers. Generational living is becoming, I feel like it's starting to come back in our society, where it's very prevalent in other parts of the world. And a lot of families are looking for that combined living because, a family that has kids, both parents have to work. So now they move in an aging parent, grandparent of their kids, and need that extra space and can do so by building an accessory dwelling unit. So this is an example of type of marketing materials that we can co-brand together. And then here's an example of a home that had no backyard, that had an in-ground pool built, landscaping done, all as part of the renovation program. Okay. On the USDA side, this is only available for rural properties only. It works just like an FHA 203K, except the benefit of USDA is that it allows for 100% financing. So the limited version can do minor remodeling, mold remediation, installation of appliances, painting, flooring. And then on the standard is where we do major structural alterations. Like if the foundation needs to be repaired, that's a major structural alteration. And it also can reconstruct a structure that's going to be demolished, provided that the existing foundation is not disturbed or built upon. Also allows attached accessory dwelling units, but does not allow detached. And then any alteration that will allow an income producing feature, like building a farm or building the ADU for rent, is not allowed. It's for primary living only. Okay. Same thing with the VA. They're limited. Will have alterations under 50,000. Anything that's structural becomes a standard. Major structural alterations are always kind of like the thing that stands out. It also allows for ADA repair, so building like access ramps, increasing door sizes, automation. We've done one with an elevator in a home out in a different part of the country. So ineligible repairs are tearing down a property, new construction, and luxury items. Okay, so as we kind of like start to sum things up, like how can renovation loans increase your business? It opens up more properties to show to your buyers. As a listing agent, it opens up the pool of prospective buyers to a larger percentage of the population. It gives you solutions for properties that need TLC, handyman special, our MLS listings that say it's a fixer-upper. Being more descriptive in your listing as a list agent will open up the pool for people. There's 8 different product options with different credit profiles. So, we have our FHA solution for lower credit. We have conventional for those that are more a little bit, financially sound. We also have the VA option and the USDA option. And the reason why it's 8 is because there's 4 programs, and we have the standard and limited for each, making it 8. And then adding content to your online listing description allows, change buyers' perspective when they look at the home, right? Breathe new life into the property by financing your repairs, right? Is a statement that you can make on a listing that's like, oh, I can do improvements, right? Create that open concept that you always wanted. Build that primary bedroom that you always dreamed of. And you can brand yourself as an agent who will offer your seller the most exposure on the property, right? So we have tons of different types of flyers and marketing that can be done, and they can all be co-branded with your logo from your brokerage along with mine. That can be sent via email, can be printed, that you can just have on hand. And if something that you're interested in, you just let me know and I'll send you information on how to kind of add your profile to our system. We also have like automated social media postings that can be built into your business pages regarding a listing and renovations. We can do single property sites, right? So like websites specified to a listing, to kind of help lead capture people that have clicked on it, people that are inquiring, and it just helps people stay off of Zillow. Pictures and details get included in that listing, and then a contact me option, which goes directly to you, not to me, um, is available on the single property website at all, as well. Now, what happens with the process specifically? A client makes an offer, a seller accepts the offer. The added need that is necessary is to have a contractor write out what's called a scope of work. So the add-on to accepting a renovation offer or making a renovation offer is that you need access to the property one more time for a contractor to walk through and design estimates for what the buyer wants to have done. We need that estimate because it gets sent to the appraiser. The appraiser will go out to the property and appraise it just like they appraise every home. They're going to come up with an as-is value, and then they're going to analyze the scope of work that the contractor provided and give us an after repair value. Meaning, hey, if we do this work, the home will be worth X after it's done. That is the basis for lending, that after completed repairs value. So we close our mortgage just like every other mortgage. Same underwriting process, just the scope of work is the added on type of need that we need to get completed. And then it closes in that same 30 to 45 day period that a regular mortgage will. Seller signs papers, buyer signs papers, seller gets paid, moves on with their life, just like a regular transaction. Now the buyer has taken over ownership and we start the renovation process. Seller has moved on with their life and does not have to wait for stuff to be fixed, done, anything at all. Same timeline. I would say the biggest difference between this and a traditional mortgage is a traditional mortgage we can probably close in like 2 to 3 weeks when we need to. A renovation is probably going to be in that 30 to 45 day range just because we have the add-on of a contractor needing to get there and create estimates for scope of work. But if all of that stuff gets streamlined, it shrinks the timeline down. Like if we have an educated buyer and an educated buyer agent representing them, and they connect them with the contractor, and the contractor goes with them to initially look at the property the first time, well, they can do the scope of work on that first view. And it shaves about 10 to 15 days off of the process. Okay. So what happens after closing is we have a draw administration team that manages the funds of the project, making sure that they're released, making sure that the contractor and the buyer are in agreement with releasing the next aspect of the proceeds for the scope of work that needs to be done. And we handle all disbursements on it. So milestones for a smooth purchase. Step one is to get a buyer pre-qualified. We need to know what their budget is for borrowing to ever give them a realistic idea on the amount of money that's available for renovation. So if they're pre-approved for up to 800,000 and they're looking at homes that cost 6 to 650, that difference between the purchase price and their max pre-approval can be their alteration budget because they qualify to borrow that much. So if it's possible, a buyer should have a contractor walk the property with them. It saves time in the process, a significant amount of time, because like I said, we don't need to schedule that second appointment with the listing agent or the seller to have a second walkthrough. Family, friends, colleagues, agents, you guys, me, good place for your buyers to get recommendations for contractors. If an offer has been accepted, I take over, right? I introduce you, the list agent, the buyer, the attorney to my team and our renovation team. We make sure that all parties understand what is needed, when it's needed, and what happens if it's not provided. We set very specific steps in our milestone process. So those of you that have worked with me in the past, you know that I am very, very adamant about breaking down the process for clients and taking them through specific steps to ease anxiety, not overwhelm them, so that these little steps get them to their final goal and it doesn't feel like it's overwhelming, right? The timing of when we can do things, an appraisal cannot be ordered until we have the scope of work. So on a normal purchase contract, I send a client a loan estimate, they review it, they sign it, we order the appraisal right away. So appraisals are happening within the first like 1 to 3 days of an accepted contract. This is why if a buyer or an agent can have a contractor walk through the property sooner than later, it speeds up the process, because the moment we have that scope of work, that's when we can order an appraisal. Once the appraisal's in, our renovation team will review if there's any underlying things that need to be repaired as well. So this will typically come up on our government programs, FHA, VA, and USDA, where they're very nitpicky about peeling paint, water stains. So if a client wants to renovate a kitchen and the only way they qualify is with FHA, right? They don't qualify for conventional. Appraiser goes out and appraiser notates that there's peeling paint on some windowsills on the outside. Our renovation team will make that a requirement as part of the repairs, because it's an FHA guideline for it to be repaired. So we go through the process of making sure that this is why we have a contingency reserve, why we set aside more money, and we'll take care of all that. So after we're fully approved, we schedule a pre-closing call with all parties, let them know the loan's ready to close and what to expect at closing. The seller receives their net proceeds at closing, just like a regular transaction. As an agent, listing and buyer representation, you get paid based upon the sales contract says your compensation is at closing, just like a regular mortgage. After closing, the borrower and the contractor starts to receive communication from my team and our draw administration team about the first disbursements and subsequent disbursements for the money to start the program and renovations. Okay, so that is I went through that pretty quickly, but if you guys, what I want you to know is we're going to have a question and answer session. I know there's a lot of stuff in the chat. And also just to let you know that lunch and learn sessions are available if you wanted to have this or any other programs that we have for webinars done in person or just for your team or brokerage. Just reach out to me or my wife and we can schedule that, or you can also reach out to Candy and we can schedule that to be one-on-one to provide that. So next, what I want to do is see what kind of questions we have in the chat. Candy, are you there?
I'm here.
All right. What do we have for questions in the chat?
Okay, so one of the questions is, are these programs for cosmetic renovations? Can the house basically be just outdated?
Yes. So the answer to that, who's asking that?
Jen.
Jen. Jen, you can unmute yourself if I don't answer this properly, but yes, cosmetic renovations can be done. So you want to just paint a bedroom or just redo flooring or just touch up something. The minimum tends to be $5,000 for these programs. And it just falls under that standard where it's, you know, hey, a client wants $10,000 to like paint the inside of the house. Loan closes, client takes over property, seller moves on, agents move on. We would do one disbursement for those repairs to the contracted painter, and then the work would start. Does that answer your question, Jen?
Yes, it does. Thank you.
Okay. All right. We have, what's the next question, Candy?
From Robert. we have owner occupied 4-family. Would it qualify?
Yes, Rob, thank you for coming. Yes, it does. So owner occupied, we can do condo, single family, 2, 3, and 4 units. The only time a 4-family does not qualify is if it's an investment property. We do not do investment property renovations on anything outside of a single family home. Rob, does that answer your question clearly? All right, Rob may have dropped off. All right,
No, thank you.
of
Thanks,
course,
Leo.
of course. Candy, what's next on there? And I see there's a bunch.
Is asking how the rates compare to regular loans.
Great question. Who asked that one?
Jen.
Okay. All right. So here's what I see with interest rates on these renovation programs. They're about anywhere from 0.125% to 0.25% higher. So a lot of clients, like especially when we have refinance conversations, don't realize how little that actually moves their payment, right? If I drop a $600,000 mortgage, 0.125%, maybe it's $40, $50 per month. So it's not anything interest rate wise that blows up the budget, but it is about 0.125 to 0.25% higher for a renovation program when compared to one that's not. But the difference is that you could never get the money to do these renovations because you either have to self-fund it or do it over time. But with the renovation, we can borrow based upon the future value of the property, which is really the big point of it. What's the next question? Does that answer your question again, Jen?
Yes, it does. And it
Awesome.
sounds great. Thank you.
All right, Candy, what else do we have on there?
All right. James is asking if you need to disclose this in an offer.
Yes. Yeah. You'd want to, like, you'd want to provide transparency to your partner agent on the other side of the transaction because it's the right thing to do from a business perspective, right? Because if we don't have that, if the listing agent and the seller don't have that knowledge that that we're doing a renovation program, they may question why you need access again for a contractor, right? So being upfront about that makes it ease, right? And the challenge is always going to be, is the list agent educated on the process? And this is where we can partner together, where if you believe your client wants to make an offer on a property and they want to finance some type of repairs in it, I proactively will reach out to the listing agent, proactively educate them, make sure they understand that if they entertain a renovation offer from our client, that it does not delay the two most important things to that person: the seller getting paid and them getting paid. If I can assure them that there is no delays in those two things, they will be more open to it for sure. James, does that answer your question? I recommend disclosing it. Nothing says you have to or don't have to.
Makes sense. Thanks.
And James actually has a follow-up question.
Sure.
Would it be in the pre-approval letter?
I would put it in the letter. So, in the pre-approval letter, it'll say the type of program that the client is pre-approved for, right? Conventional FHA and what type it is. I would say that it's conventional Fannie Mae home style. Or I would say, FHA 203K standard or limited. Like I would put that as the program that we're doing. But when it comes to like a purchase and sales contract, James, you're just going to put conventional mortgage. You're just going to put FHA mortgage. Like you don't have to list the actual name of the program in there. It's very similar to when, we help a lot of clients with mass housing. We're one of the top mass housing lenders in the state. When a client submits an offer, I don't put mass housing on it because it's a conventional mortgage or it's an FHA mortgage and the timeline's the same. So I don't want to scare anyone that lacks the education that mass housing doesn't cause delays as well. Closes just with the same timeline and same process. Other questions we have on there?
Yes, Mary Ann is asking, do you need to find a contractor to start the renovations right after ownership? What happens if it's the winter and they can't put in landscaping or they can't do that? What happens in that case? Does it have to happen right after?
Yeah, that's a phenomenal question, Marion. A very important question. So the timeline for repairs is going to be determined by the scope of work that's listed out in the contractor's estimate. Okay. Um, we can provide up to 12 months for the renovations to be completed. And it really depends on the type of project. And we will give the contractor a timeline. So if it's the middle of the winter and we need to replace a septic, I mean, I don't know how many, I mean, I'm not an expert in this, but I know there's a moment where like the ground freezes and you can't do anything. Same thing with like concrete repair. Same thing with like exterior work. It's going to be given a longer timeline than 3 months. It might be given 6 months, right? Just because of the season. So it does not need to start immediately, but it needs to be completed within a specific time frame, and it can go up to 12 months. Mary, does that address your question, or do you have any follow-up to that?
No, that was fantastic. Thank you.
Perfect. Perfect.
It actually asks also, how will the home be insured?
Oh, so the home is insured just like a regular home insurance policy. So the client will obtain insurance, to protect the future value of the property based on the appraisal report. So same type of home insurance policy. And then this is the reason why if a contractor is not licensed, like in the state of New Hampshire, they're not required to be licensed unless they do like electrical or mold remediation. There's no licensing requirement for a GC in New Hampshire. We require them to be insured. So it can't be like Joe's GC that, is a one-man shop and doesn't carry any liability insurance. Like they have to carry liability insurance. And realistically, they should be fairly established to self-fund portions of the project because the disbursements might happen in 1 to 3 to 5 different stages. So you have to be able to keep your business running as a contractor while you wait for the next disbursement.
Great, thank you.
You're welcome, Marion. Candy, do we have others on there?
We do. Is there another appraisal done upon completion of the work?
All right. Is that from Trish?
Trish?
Trish, yes, great question. So, and another
Tish.
appraisal, Tish, I'm sorry. Another appraisal does not need to be done on the property. So the appraiser is going to complete one appraisal in the beginning of the process to determine the as-is value in its current condition, including the scope of work estimate from the contractor, and will give us what's called an after repair value. So if the work is done based on what is said in this estimate, the home will be worth Y when it's done. That is the figure we use. That becomes the value of the property for the next 6 months. Tish, does that answer?
Yes, thank you.
And one more question from Jen. Actually, I have a couple questions. If it is used for septic, then would we be able to close without a Title V?
That's a great question. Who asked that question?
Jen.
All right, I'm gonna confirm that one and send that out in an email to everybody. From my experience, it does not need a Title V because the septic is part of the scope of work to be repaired. So we don't care about the current condition of it because it's going to get replaced or repaired. So then after septic is done, you don't get a Title V report, but you have like an inspection from like the health department to make sure that it was done to code and everything. That is something that needs to get submitted after the work is done. But I will confirm to make sure, Jen, because I never want to give an answer I'm not 100% sure on.
Thank you. Appreciate it.
And then Kim is asking, how soon does the owner need to be in the residence?
Within the first 12 months. So that's the project's for 12 months. So if a client, great question, Kim, if a client is looking to buy a home that is not habitable, that is when we borrow a little bit more money or take some of the borrowing power and put it in what's called a contingency reserve for future mortgage payments. So because we know if the client can't move into it, they likely have two housing expenses. They're likely paying rent or contributing somehow if they're not living with family. And now they have this new mortgage payment. To make sure that affordability is still there and there's no financial distress through the process, we allocate some of their borrowing capacity to a mortgage payment contingency fund. And it will start to make the payments until they're able to move in and take occupancy. But within the first 12 months, just in line with the level of repairs being as long as 12 months. When there's money left in those contingency funds, like the contingency fund for like any extra repair that might pop up when a contractor takes down walls, and then those mortgage payments, if there's money left in those funds, it gets applied as a principal reduction when everything's done. And then we'll re-amortize. We'll also recalculate the client's future payment.
If the house is habitable
Mhm.
and still needs a significant amount of work, it'll be okay for the owner to live there, correct?
Oh, 100%. Like if it's legally habitable, it's the same thing with primary residence, right? It's to occupy it within 60 days. If it's a second home or a vacation home, like there's no occupancy requirement. Second home or investment property, if I said that right. It's a little early for me. Some more coffee. Sorry. Does that answer, Tish, any follow-up to that?
Yes, it's great. Thank you. So it's just a complicated property. The original house is completely habitable. The addition is actually a little bit bigger than the original house, and the first floor had been planned for an ADU, and the second floor was still wide open. So there's just like so much as far as possibility that people are confused by it. A little bit of a challenge.
Right. And we can speak together one off. This is your listing, correct? That we kind of talked about a
Yes.
couple weeks ago.
Yep. That'd be
Okay.
great. Thanks,
Yeah,
Leo.
we can talk one-on-one in the next couple days and just see if we can like educate your seller if they need to be educated, and then update the listing to be as marketable as possible to potential buyers on the description piece.
Absolutely. It's super challenging trying to reach the right price point buyers.
Totally. And I mean that's a challenge across the board. Like I have like an influx of manufactured home clients, right? Looking to buy mobile homes for like 100, 200K because their rent's going from 1,200 to 1,500, but like a single family home is a $4,000 a month mortgage payment. So like, what are they going to do? So it's definitely a stressing moment in society for all. Danny, any other questions that we have on there?
Yes, James is asking if there's any restrictions on selling the property after the work is complete.
Is there any restrictions on selling the property after the work? So there is not. Life happens. Someone might buy a home a month or two later and not work out, or something happened within a family that causes them to need to sell the property. There is absolutely no prepayment penalties. It's a regular 30-year mortgage. That's same guidelines as a regular mortgage, no prepayment penalties. The only challenge there is someone's intention. If someone has the intention to use one of these programs as a means to flip, there's better solutions for that. Like we have flip programs for builders, like specialty types of mortgages that are designed to be interest only payments, balloon at the end of 6 to 11 months, where a contractor or somebody can borrow money, do a fix and flip, pay off the loan, and move on. So James, no restrictions, but the client's intent does matter, and there's better solutions if their intent is to fix and flip. Any follow-ups to that, James?
Got it. Thanks.
Perfect. Candy, any others?
Yes. Johnny is asking, what happens when the appraiser's RVM is lower than required? Aside from a higher down payment, can they have a contractor revise the scope of work?
Yes. So if the value, if the after repair value comes in lower than what we need, right? So the basis for lending is always the lowest number, either the appraisal or the purchase price. The good thing is that with FHA specifically, we can go up to 110% of that after repair value. So it gives like another 10% cushion in the variability of the appraisal. But say that does happen. A client can go through that scope of work and be like, all right, hey, let's not do this project, this project, this project to bring down our borrowing amount. We would have to submit that back to the appraiser to review to make sure that it doesn't change the after repair value. Because as agents, you know, there's certain things that add value to a property and there's certain things that won't. They're more just desires, right? If you want to like painting the inside of a home isn't necessarily going to add value to an appraiser's perspective. It might add value to a buyer that's looking to buy it, just from an aesthetic view. But from an appraiser perspective, like painting a home isn't going to add value to the end number. So we'll always use the lower. Client can remove repairs if it's outside of the budget that's allowed for them to borrow based on the value of the property. We can also adjust their loan to value calculation. So we had a webinar a couple months ago on appraisal gaps that will rerun this year, later in the year. But if a client has more than the minimum down payment, we can always just adjust the loan to value calculation and buy out the PMI. Probably not the most clean answer, Johnny, but what do you think? Any follow-up to that?
Oh, no, that's great. Thank you.
All right. Cool. All right, Candy, do we have any other questions in the chat?
I think one just popped up. The scope of work estimate needs to be very specific, correct? This is from Tish.
The scope of work estimate needs to be very specific.
So it's like not like a punch list, but before the punch list, So if they're doing a kitchen renovation, do you need the whole layout of what's being done, or do you just need kitchen reno and it's estimated at $50,000?
I got you. Yeah. So we don't need like designs. Like we don't need any architectural or graphic designs of like what's being done. That may be needed if there's certain permits that need to be submitted, but that's the contractor's role. On our end, what we need is a detailed written out estimate that breaks out the cost of labor and the cost of materials and a description as to the work that's being done. Like, so the description would be like, hey, we're doing a full kitchen remodel. Like that's enough. And then it needs to list out an itemization of all of the hard costs for material and then a breakout of the estimate cost of labor.
Thank you. That's perfect.
Of course. All right. So open forum at this moment. If anyone has any other questions, we're coming up on my 10:30 commitment that I have with you guys, and I am always incredibly impressed when I'm on time. So I'm glad we're rolling. So we have about 4 minutes. You guys can hang out longer if you want, but feel free to unmute if you have any other questions.
Thanks so much for everything. It's really helpful.
Oh, of course. Of course. Awesome. So this meeting, did someone unmute? No. Okay. So this meeting is recorded. I'll happily send it out to you guys. Just give me about maybe less than a week just to do some editing to remove the beginning portion where it's just me and Candy talking. You guys don't need a copy of that. So I can just send you the bulk of the presentation to refer to. So one reminder is that if you're interested in partnering with our team, just reach out. We'll set up a time to talk and see if we kind of mesh from a kind of a personal philosophy perspective. Like I'm all about helping people, and if we match, we match. If we don't, no big deal. Still want you to succeed, and we'll always offer assistance. If you're interested in any type of co-branded marketing material to have in your toolbox, please reach out to me and I'll set you up with a little link to like build a profile so that we can get your photo and your logo onto those documentations. And just know that we're here for you. We're here to support you as a list agent, as a buyer agent, and help your buyers hit their ultimate goal and help you guys build your businesses and hit your goals as well. So with that, enjoy your day. Let you out a couple minutes early, and thank you so much for coming.